Hello traders, Gary Wagner here. Just after 10:45 in Honolulu, 4:45 in New York. On Friday, happy Aloha Friday as we say on the islands. It is October 29th, 2021, and this is the Daily Report for Gold and Silver, our weekend review. Gold prices did fall sharply, currently trading at $1784.20. That's putting it down $18.40 on the day, a little over a full percent. But it is the low that concerns us the most because that affected our current trade. $1772.40 was the low. We had a stop at $1774. We will detail that trade when we look at some charts. But first, the primary explanation for today's sharp sell-off was dollar strength. The dollar gained 0.88%, while gold lost 1.02%, which means that only 0.2% were due to selling, with the remaining, call it 0.9% due to dollar strength today. Silver also incurred a drawdown, but only 0.68%, which is much less than gold's decline in terms of percentage drawdown. This first chart is a daily candlestick chart. We've been using it throughout the last couple of weeks. We've identified a series of lower highs and higher lows, a compression triangle. We thought we saw a genuine breakout earlier this week. Monday's candle filled in the gap that was created from Friday's candle, which had a solid move to the upside, however, failed to close above $1,800 per ounce. On Monday, it did. We issued a trade alert. We got in just above $1,800 an ounce. We put our stop at $1774. The rationale behind that was the low 3 days prior comes in just above that at $1777. And we felt that if the market's going to continue to trade higher, that will not be challenged. It certainly was today when the low of 1772 effectively stopped us out and then recovered with the current fix on December gold futures at 1785. That being said, when the Federal Reserve convenes on Tuesday of next week, concludes on Wednesday, it will be the press conference by Chairman Powell, as well as a statement release that will shape the future direction of gold. If, like I believe, he has to back off a little bit from a more hawkish stance in terms of interest rate hikes next year, we will see gold rise. If I am incorrect, as the other faction believes, that inflationary pressures are transitory, the Federal Reserve continuing its more hawkish stance. If that is the case, we will see gold fall dramatically, which is why my current forecast is really going against what the majority of analysts out there are saying, and that is the Fed will stay its course. It is for that reason that we have this continued strong resistance just above $1,800. It was reported today that every time the market has hit this level, the hedge funds have come in and sold gold short. But I believe that gold will challenge $1,836 by the end of the year. And all things being equal, if we continue to see rising inflation, we will see the potential for gold to challenge $1,900 per ounce by the first quarter of 2022. This has been Gary Wagner, wishing you, as always, good trading.